In Barron's, we got Mohammed El-Erian. 3 reasons it's not too early to criticize the Fed, or maybe my enunciation here. The story of the Federal Reserve's efforts to rein in inflation is still being written. By the way, they're the ones that created the problem through something called quantitative easing, adding at least 40% to our money supply in a very short period of time. 40%, that is so much money. But Mohammed, chief economic advisor at Allianz and chair of Gramercy Funds Management, says it's not too early to critique the job the central bank has done thus far. So first off, let's understand, the Federal Reserve is neither federal nor reserve. Central banks are owned by private individuals that are extraordinarily wealthy. So that's an important note here. In fact, El-Erian says criticizing the Fed when it missteps is essential. He says without accountability, you don't get politically independent central banks. So that is why I've been unusually critical, because this Fed has made mistakes. This is what he told Barron's Andy Serwer in an interview conducted on April 12th at a conference in South Carolina. I don't think I could ever be a newscaster because I don't even worry about enunciating or pronouncing these names right. So it says in that conversation, he laid out 3 reasons why he believes it's not too early to criticize the Fed. Number 1, inflation wasn't transitory. The Economist says the Fed's first mistake was misjudging the nature of inflation that took hold during the COVID-19 reopening. We know that the transitory inflation call was false. Transitory means not only short-term, but it means people don't change behaviors. They believe it's temporary and it's reversible, and people did change behaviors. He says poor communication pointed to market volatility during Fed press conferences as evidence the central bank's message hasn't been consistent. In fact, markets have been 3 times more volatile during Chairman Jerome Powell's conferences compared with his predecessors. So the Federal Reserve has this chairman, right, that's appointed, but the Federal Reserve is still a central bank, and they continue to make changes with interest rates. When they decrease the interest rate, well, that means that the reserve requirement, or what it takes for these banks to borrow money from the Federal Reserve, the price is cheaper. So they have a better spread. If they can get the money for 1% and turn around and rent that out, for 2%, that's what they might charge for a car loan. That's 100% markup. But if it's costing them 3 or 4% and they can only, lend it out for 6 or 7, it's not even 100% markup anymore. It actually hurts the banks. And even worse, the banks go out there, they take their reserve, and that's the amount that they have to set aside for however much money they've been given. And they put that in treasuries, which are T-bills, T-notes, and T-bonds, which often are the shorter term, that they're using. And then when interest rates go up, the value of those bonds go down because any new investor can go get a higher interest rate when they buy the newer bills versus the old ones. And so when people start doing a run on the bank, or they want their money like Silicon Valley Bank, they have to sell at a discount, which means they don't have enough to cover everything. And by the way, quantitative easing gave these banks a ton of money that they then, instead of lending it out, used it to increase the amount of reserves they had at really low interest rates. Then the Fed comes along and says, we're going to raise interest rates to battle inflation. The inflation that they caused. And so this is the problem. Look, I get there's other factors. I get it, there was COVID, there was lockdowns. I get, there's turbulence in the economy, and it was already an overinflated economy because of a major run-up from 2010 to 2020. And then we keep doing all this patchwork that can be problematic. So he also says the Fed's not owning its mistakes. The Fed is the only major central bank that hasn't publicly explained why it misread inflation, why it waited too long to start countering it. The European Central Bank has done that. The Bank of England has done that. So although the ultimate outcome of the Fed's action remains uncertain, the Fed shouldn't be left off the hook, he said. It doesn't mean we should not hope that they can land perfectly. I don't think they're going to. I sure hope so, because it's a lot at stake, he said, but I fear it's unlikely that they will. I agree with him that it's unlikely that they will. So they add a bunch of money to the economy through quantitative easing. Now they're in quantitative tightening, starting to pull money back and raising interest rates, which means a lot of people are holding on to their homes at lower interest rates, which is creating this situation where there's not enough housing. So now rents are going up because it's, so expensive. Can they even, could someone go sell their home and even afford rent? My sister looked at selling her home. Rent was, for a 1/3 of the size of what her current home is, and not nearly as nice, was the same as her payment because she has such a low interest rate in the 3% range. So this is going to create a lot of turbulence. And I just think it's amazing that all we talk about is, oh, if they just raise the interest rates, that's going to battle inflation. The inflation that they created by printing money, by putting money in Wall Street hands of Wall Street bankers and all these other banks. And now those banks are in trouble because the interest rates have changed by the Fed. It's kind of like a wolf in the hen house kind of situation. Hey, will you take care of all this? But you might not have our best interest in mind, or maybe not adequately be able to take care of all this. And now the Fed gets higher interest rate that they're charging, and they're saying that's to only battle inflation. But what does that mean for the Federal Reserve and the fact that they can get higher interest rates? You know, that's something to also consider. Now, the only good news about higher interest rates is for retirees that now can put their money and get a fixed interest rate, but there's even problems there because we're hearing about, well, what if they don't raise the debt ceiling? There could be a government shutdown. I promise you, they're going to raise the debt ceiling. That's this whole media cycle and all this news that we're getting to make people feel afraid and uncertain. And then, oh, here we come in and save the day. Well, guess what? You overspent. You borrowed a lot of money. In 2008 and 2009, I believe it was over $5 trillion. Went to bail out all these banks that then became the biggest buildings in every single city and became this massive industry that there was supposed to be regulation, but here we are in the same kind of problem that we were before. Maybe not as bad, but still a major concern considering 3 banks went under and took $36 billion from the FDIC, which these banks pay premiums to have that insurance, but they only had $123 billion. That's 3 banks, and over 50% of banks now are said to potentially be insolvent if there's starts to be a run on the banks. So they're in a very shaky situation, and the Fed is a huge part of it. So I'm glad in this article that we found, this chief economist for Allianz critical of the federal banks, especially the central bank here in the United States, because they deserve to be critical of. It deserves that we scrutinize this and not just blame inflation on supply chain issues or COVID issues, but we should look at the root of the problem. We printed money without people creating value. Money should be a measurement or storage of value, and dollars should follow value created. When we just flood it, it's like watering down the soup. It no longer has the same nutrients, even though it looks like that there's more there. And that's what we've done, is we've watered down our money. And this is why other countries like China or Brazil are saying, we don't like what's going on. Maybe we're going to do our own thing. It's why other people say, you know what, maybe I should just trust Bitcoin, even though it's super volatile, because they're not making more of it. It has a finite supply, and our money does not have a finite supply. As we keep adding to it, it doesn't add more economic value. It starts to demean the very working people that are trading their time for money, doing all that they can to make ends meet. And now all of a sudden, prices start to go up and wages don't follow at the same level. That's a problem. Now, it's not that big of a deal for people who have a lot of assets and people who are wealthy, or the central bankers themselves. And so I'm going to be critical as well. So hopefully this gives you a little bit more insight of what's really going on. So what can you do about it? That's the question. Well, I've got plenty of resources, but let's start with, you've got to invest in yourself. If you have too high of interest rate loans, maybe pay those off before speculating with your money. Learn to be more efficient with every single dollar, and there's plenty of videos I have right here on YouTube that can help with this. How do you save on tax? How do you save on interest? How do you save on non-performing investment fees that aren't actually putting money in your bottom line? How do you save on duplicate coverages or improper structure with insurance so you can put more money back in your pocket? So it's about paying yourself first and automating it. Find the money that's being lost to financial institutions and the government and put it back into your life. Find where you have any assets that aren't creating cash flow and think like a bank. Start creating more cash flow, not just waiting for 30 years from today, and invest back into yourself so that you can increase your income, so you can expand your means, not just cut back because no one shrinks their way to wealth. So if this is helpful, look, I've got great resources. I think kind of the most instrumental thing I ever created on this was Killing Sacred Cows, my first book. You can go to GarrettGunderson.com/KSC and grab that for next to nothing, and even include an audiobook if you prefer listening. Or you can just navigate the different videos that I have on here, because I'll continue to go through articles and dissect them to give you more information, a different perspective, and better questions so you can discern truth from falsehood. Hey, thanks for watching. I appreciate it. And if you're enjoying these videos, well, there's good news. More where that came from, so go ahead and click through and watch the next video now.